Hello friends, welcome to my channel Simply Stocks, and today I'm going to talk about high energy batteries. Can this be big over the next coming years, or one should avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about high energy batteries, a small request is kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. And if you cannot pay on Patreon, you can join the WhatsApp membership. That's an annual membership. For detailed market or company talk or number of stocks you're holding, you can connect with me through email and we can work things out with a fee. And you'll get all benefits of Patreon once you get the WhatsApp membership. Now, the company established in 1961, they manufacture batteries for large air vehicles like aircrafts, helicopters, and UAVs. The market cap of the company is around 300 crores, and the main customers of the company are the Army, Navy, and the Air Force in India. And so it is in a very niche space. Related defense gets the most government orders, so this is where the company probably works on, and there's a high ROE and return ratios which are pretty good for the company. If you look at the financials, then sales went down by around 23% in this quarter, the December quarter versus you can say, sorry, the September quarter. So these are Q2 numbers, not Q3 numbers, but Q2 numbers where the sales went down by 23%. Profit went down sharply by 56%. It's a debt-free company with low promoter and institutional holding. It's a very small cap company, so you have to understand that. But what attracts me towards this is the ROE, which is around 37%, and margins of 30% is pretty good. All the margins have dipped over the last few quarters for the company. In terms of performance, stock has been 5x over the last 4 or 5 years. Stock has done exceedingly well from around 40 50 rupees to have gone up so much, and it has declined over the last 3 4 months. The decline has been sharp from those levels, but numbers have been volatile. So numbers were pretty good up till the beginning of FY23, and then a couple of quarters for a couple of quarters the numbers have not been that great. I think things should get better as government is looking at defense expenditure going forward, especially after next year's elections. If the government comes back into power, more expenditure will go in here for the next, you can say, a couple of years or so. So it is in a niche space with very low or no competition, but the company is set to do well because the government's more focus is on increasing defense allocation, and we have an understanding that there is a need for more, you can say, defense procurement of new products in defense. So we'll see how this pans out and how this benefits a company like high energy batteries. So demand will increase as security is first and foremost for the nation at the moment, and there's strong return ratios and margins. So why I believe that it is a compelling buy here is that India defense expense will only increase going forward. Whatever expenditure that India has on defense, I think of the total budget, I think that is only going to increase with the kind of volatile situation that we are living in, especially with whatever that is happening in Europe. So need for better machinery and equipment, as I explained, that there is a need for changing the whole equipment and machinery altogether and bringing in new ones. Valuations now much better after the decline. Currently, the stock is trading at 20 times forward earnings, which is not expensive. We have seen defense stocks normally trade between 50 to 70 times. So it is a very attractive at these levels. The only point here is that the numbers have not been that great for 2 quarters. So let's see when the numbers turn around, then the stock could surge big time. So I don't think it deserves to be at around 300 crore market cap with such a business that it is doing. The market cap should swell going forward. A niche space with high barrier to entry. I don't see more players getting in here very quickly. Very difficult to get into this space and get orders immediately and get things going. A consistent order flow expected going forward, especially from FY24 onwards. In terms of technicals, if you look at stock has corrected over 50% from the top, as I explained, it went to around 650, 700 levels, have been in a bear grip for a while, and there's strong support around the 250 to 70 regions. The stock is around 320, 325. So I believe that on any 5-10% decline from here, it's a very good buy. May consolidate for a while at the moment, but overall I think from a 2-3 year perspective looks very good at very attractive levels. From a 5 year perspective, even from a 2 to 3 year perspective, the company should do well. Highly liquid, so kindly avoid trading into it. Probably a good investment bet it can be. So, in my opinion, buy if you have a high risk appetite, then you can buy this as a small cap, probably 3-4% of your total portfolio, not more than 5% at any cost. And keep track of numbers. Have at least you can say 1 year view if you buy, not less than that. But I think 2 to 3 years time frame is much better, considering that post 2024, I think more orders should come in. So wait for massive declines to buy. Even at current levels, one can accumulate. So this was a video on high energy batteries. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and can you support me on Patreon. Thanks a lot for watching.